New Zealand's trade balance continued to widen in March, according to data released today, rising to a seasonally adjusted $920 million from last month's $818 million. Joining me now to expand on this data is ASB Bank's Tennent-Brown. Chris, dairy products accounted for approximately 30% of all exports, continuing to affirm a dairy boom. But which other products noted a pickup?
Well, the dairy story's been pretty well covered, but two of the other stories, forestry has steadily been picking up, both in terms of the values of products, but also in the overall export receipts. And now meat exports are actually starting to look quite good in the latest data for the first quarter of this year. So those are the three main exports for New Zealand, and they're all looking pretty reasonable in the latest data.
Are these figures sustainable? Will we be noting an even larger trade surplus next month? Or can much of this be attributed to a March peak?
There's a lot of seasonality in New Zealand's exports, but we've seen a very good tail end to the New Zealand dairy season, and we're probably going to see those volumes still coming through over the coming months. So we're actually expecting to see trade surpluses over this year. So we're thinking it's going to continue. On the other side of the equation, imports have remained reasonably subdued, but we're not expecting that to carry on forever, particularly with the big Christchurch rebuild and broader economic activity taking place too. That should lead to a bit of a pickup in imports over the years ahead.
So what do Kiwi dollar traders make of this trade balance?
Well, the Kiwi's been a little bit heavy today, but so's the Aussie dollar. So this data hasn't really knocked the Kiwi around too much at all, and it's just stayed trading within its recent trading range over the day. So your traders haven't really looked at it too closely, I don't think.
With economic performance now priced in and the RBNZ's much anticipated second rate hike complete, could we now see a big move down for the Kiwi dollar? There's a lot of emphasis being placed on the key support level of 0.85.
Well, the New Zealand dollar has come back a couple of cents from peaks earlier in the month, but we expect it's going to stay very strong over this year, in the absence of some sort of shock coming that we're not expecting. The fundamentals in New Zealand are very good. You've mentioned the RBNZ; they're likely to hike again. The trade situation in New Zealand's very strong, and the recovery in New Zealand is looking very good. New Zealand's economic growth over this year and next should be pretty strong compared to many other economies, and all of those factors, I think, will keep the New Zealand dollar strong over the rest of the year. And we're expecting the trading range for the New Zealand dollar over the next quarter to be pretty similar to what we've seen over the quarter we've just been through, and so the sort of 83 to 88 cent US range should hold for now.
Chris, many thanks. That's all we've got time for right now, but coming up today on Dukascopy TV, Monica Gibson will be bringing you a look ahead to the Hungarian central bank rate decision, and Ben Jones will be back in the studio with another Commodities Corner interview. Goodbye for now.